New Zealand mortgage rates are falling. Good news, right? Or is that just a setup before the punchline? And that punchline is your bank account sobbing into a pillow. Today we're joined by someone who actually knows what's going on. Mike Jones, Chief Economist at BNZ. A guy who's a crystal ball with a degree. Stick around if you're wanting financial freedom faster.
Financial freedom faster. Financial freedom faster.
If you like making money rather than watching everyone else do it, hit that subscribe button and get ahead, because this is New Zealand's fastest growing real estate and investment show. Mike Jones has had senior roles at both the Reserve Banks of New Zealand and Australia, and also stints at Westpac, ASB and Fonterra. He's also one of our most popular guests. Mike, if New Zealand mortgage rates are dropping like my crypto portfolio, should we be popping champagne or just bracing for a surprise invoice from somewhere else in the universe?
Yeah, morning. Thanks, Andrew. Great intro. So, yeah, mortgage rates falling. I think it's being, they are obviously being greeted with open arms by borrowers out there. I think the sentiment I get a little bit, though, is, well, they're just helping to pay the bills, because you've obviously got some stuff on the other side stacking up, things like rates, maintenance, insurance costs. But I think what we're seeing in the market now, and I put this in my note of a couple of days ago, is mortgage rates have fallen to a level where they are starting to make the numbers work again for prospective participants in the housing market. And so that is underscoring, I think, a bit of extra activity, a bit more turnover, buying and selling in the market from what has been a pretty frozen up sort of condition over the past couple of years. So things seem to be stirring.
Are New Zealand mortgage rates the new Tinder date? Good looking on the surface, but if you hook up now, it may be something later you regret?
I struggle with working that metaphor through, but yeah, look, they're falling. I think our view would be that as the official cash rate comes down further, we're expecting more cuts later this year, that you'll see those mortgage rates continue to fall. So it's really just, I think now the shorter dates, though, your 6 months and your 1 year terms, I think have more downside. We think both of those rates are headed below 5%. Less so the 2, 3, 4, 5 year rates, which now more or less fully factor in the cash rate easing cycle that everyone's been expecting. So we're kind of down into that part of the easing cycle or mortgage rate declines where it sort of gets a bit more nuanced. It's not just falls right across the board, as you've intimated. It's a little bit more shifting around the curve. And so that's the thing we've flagged to watch out for probably over the second half of this year.
Just a reminder, the biggest investors, the most successful landlords, and the people making serious money in real estate aren't waiting for someone to spoon feed them information. They're here, getting the insights first. Subscribe now and make sure you're one of them. Mike, what should we be locking in with New Zealand mortgage rates now?
Yeah, I think we are seeing the tide start to change. I mean, we've talked before, of course, about the fact that this is the year of the refix. You've got over 80% of all mortgage debt refining this year, and actually the next 6 months we're really into the thick of things. So about 50 to 60% of the book rolls in the next 6 months. So that's why we're getting all these questions from people about what's going on. We've never had so much interest in the mortgage rate outlook or interest rate outlook. And yeah, I think the tide is changing. With the past couple of years, it's been very much a short-term orientated strategy, fixed for short terms. Rates come down, you can refix at lower rates, and you kind of roll down with the curve. Yeah, what we're seeing now is I think that the hurdle to keep doing that has gone up. So when we run the scenarios, and I head back to the safety of my spreadsheet like I've done in the note of earlier in the week, that spreadsheet's basically saying, yeah, you can keep going for short terms if you like, but the hurdle to break even on those strategies is going up, because you've seen some of those term rates fall, your 2 years, etc. So yeah, what we're saying is there's starting to be more value in some of the longer fixed terms, and I think you've seen that sort of picked up a bit in the media and the sentiment as well, and people seem to be shifting, or at least having a much harder, closer look at longer term fixed scenario or strategies.
Yeah, the risk reward ratio has changed quite a bit towards the 2 year rate, so that's good commentary from you guys. With New Zealand mortgage rates, they're falling. Is that a good indication the economy is improving?
Yeah, it should do. It should turn the economy around. I mean, it doesn't happen overnight, as we all know. It's more the super tanker turning than the jet boat, for sure. But the indications we're seeing out there, both in the anecdote, talking to people, and in the numbers is that the economy is turning. It probably isn't racing away. It's probably disappointing a few people actually with how slow it has been to turn. And part of that, I think, is the fact that the recession that we've been in has been pretty nasty, probably the biggest one we've seen on a per capita basis for a number of decades. And so it's taken some time to sort of shake that off. But it is happening. And look, let's not forget as well, we still think, and the Reserve Bank is telling us that they're going to cut rates a little further as well. So there is a little bit more stimulus still to come through on that front. Of course, we've all got one eye on what's happening offshore at the moment as well. But I don't think that's something that will necessarily, well, it might be a threat to the recovery, but it won't stop the recovery that's occurring.
With New Zealand mortgage rates falling, should we trust this recovery? Or is this just the housing market's version of, we promise this time it's different?
Yeah, I think there's risks out there. I mean, look, the turning that we're seeing today is probably a bit wobbly, a bit shaky. We're not there yet, and we've got a few of these unhelpful risks turning up as well, in particular the tariff actions or trade wars that are occurring around the globe. So there's definitely no sort of promises or commitment that this is a surefire thing. As I say, all the indicators are suggesting that's where we're going. We're heading north rather than south, which is great. I think the other thing we probably need to talk about very briefly on that is that New Zealand's primary sector is really finding its feet. You know, the last 6 months, we're seeing the cash flows, offshore pricing, a low New Zealand dollar, all combined to produce a pretty nice set of conditions, or certainly improved set of conditions for primary exports. I've just got back from the Waikato and feeling a lot better down there than they were. So that's another, I think, really solid fundamental leg support for the economy.
And can you confirm BNZ is still forecasting a 7% lift in national house prices for 2025?
Yeah, overall. I mean, look, every time we write one of these reports and we kick the tires pretty hard on what we're seeing out there. You know, we've got a view out there that we've had that actually for 12 months now, which is, that's starting to get old age for a view about house prices. Normally you see those changed a bit more. We've had that view. We get about a 5 to 7% lift for 12 months. We always kick the tires on it pretty hard. You always get risks and different indicators going on all different directions. But when we put it all together and look at the net, still says to us you're going to get a bit of a house price bump this year. It's going to be a bump, not a jump. We've been pretty clear on that in the report as far as we can see. So we're not looking at any sort of rapid, aggressive froth type house price upswing like we saw last time around. But yeah, we're seeing the market stir. We're seeing activity lift, and typically after you get that extra activity, it does tend to put some upward pressure on prices. And we've seen now for 3 or 4 months a very small but consecutive increase in monthly house prices. So it does seem like the market's turning.
When are you going to get back to those peak 2021 house levels?
Yeah, it was a fair old boom bust cycle. Well, if you look at our forecasts, and not everyone will, house price forecasts are, as always, fairly unpredictable. But if we get our 7% odd increase this year and build on that, we'd think it will be not until early 2028 until we get back to that peak that we saw in 2021. So we compared that to what you've seen out in other countries we tend to benchmark ourselves against. And look, Australia is already through their previous peak, so is the US. The performance of the New Zealand market's much more akin to what you're seeing in the likes of the UK and Canada in that respect, and that after the COVID frenzy, things really just died off and stayed flattish for a number of years. So, there's obviously some silver linings to that. The longer you have house prices below that peak, the more time you've got for things like incomes and rents and things to catch up. And so there has been a clear affordability improvement for some people. And I think that's why you've seen first home buyers until recently a really big part of the market, because the affordability calculations, especially with mortgage rates falling, are looking a lot better than they were.
National house prices have flatlined for 2 years, similar to Canada and the UK, but underperforming compared to Australia and the US. Why is there a difference in that curve?
Yeah, I think a lot of it is, I think it's probably two things. One is what happens in those countries' supply, on the supply side, and the other is the respective performance of their economies. Now, we know that New Zealand won no prizes on the latter. We're probably coming out around the bottom as far as our respective economic performance goes. So, maybe that partly explains why we haven't had the house price appreciation that some other countries have had. We've had quite a flip round on the supply side as well. I mean, the question I got a couple of years ago was, why have we got a massive house price boom in New Zealand, way more than the rest of the world, when our mortgage rates are low, but they're actually lower in the UK and elsewhere? And I think it was because we had that really tight supply picture for a wee while. So any extra demand we got went basically straight onto the price, and you got that boom. That's flipped around, and now we've got probably still a mild excess of supply in the market. That's obviously holding back our prices, and you're not getting that to the same extent, say, in Australia, where the market is a lot tighter. There has been less of a supply response, and so you've had more rapid house price increases.
Mike, in your Property Pulse report, you've got regional heat map going into different areas of New Zealand. Where are you seeing hotspots and where are you seeing areas of concern?
Yeah, the regional hot or not has never been clearer, which is the South Island is relatively speaking hot and the North Island is not. So look, the heat map is always relative to each other. It's not one region is outright strong. It's that region is strong or cool relative to elsewhere. And probably just reiterates what the feeling is in the market at the moment, which is South Island, Canterbury and Otago, that they're into a housing market upswing that's probably already 6 to 12 months old. Whereas here in Auckland, elsewhere, certainly Wellington and Waikato around the North Island, the property market is that much cooler. And we kind of think that broad relativity will remain in place as we go through and the market overall starts to pick up. I think you'll probably see the South Island remain around the top of the housing market pops, and that's because there are people moving there basically. The internal population flows continue to paint a picture of people moving south. That's obviously bringing some construction with it, putting some extra pressure on house prices, and those economies are tending to perform better as well. So I think the South Island probably remains at the stronger end of the spectrum. I think Wellington remains at the weaker end, and the others sort of somewhere in the middle. Certainly we've started to see the underperformance of Auckland, which was a real feature of the last 12 months, start to reduce. So Auckland does seem to be moving a bit more. So we're more a middling sort of area rather than in the back half as we were previously.
Great insights on your Property Pulse report, Mike, and I suggest if people want to look into the deeper insights, they jump into the BNZ website. So, Mike, thanks again for joining us.
Pleasure as always. No, thanks, Andrew.
Just a reminder, smart investors are always ahead of the curve, and that's exactly why this is the fastest growing property channel in New Zealand. Subscribe now or enjoy watching other people slap up deals while you wonder why you're still stuck waiting for the right time.
Less debt, more cash, passive income coming fast. Make your money work for you. Live the dream, it's overdue. So don't just wait, take control. Mortgage HQ will make you bold. Financial